Good morning and welcome to the ADS Securities Markets Update. Today we will discuss, or we'll only discuss, the possible outcome, for the US jobs report, in addition to an overview of our favorite pair again, which is the British pound. But beginning with the US jobs report, it will be released today at 16:30 Abu Dhabi time, which is equivalent to 12:30 GMT time. The main focus today will be on the new jobs, the unemployment rate, and most importantly on the wages growth on a month-over-month and also the year-over-year average wages. Even if the jobs report also came in, or the jobs came in with a positive or negative surprises, the key for today will be, or the key for the Federal Reserve today remains the wages, especially after the notable decline in wages increase in Q2 of this year. The average estimates for today non-farm payrolls stands at 225,000, and this is again the average estimates. The higher band of the estimates stands at 310,000, and the lower band of the estimates stands at 140,000. The unemployment rate is set to remain stable at 5.3%, side by side with the U6 unemployment rate, which is a wider range of statistics for the unemployment, basically set to remain also stable at 10.5%. Finally, the month-over-month average or average hourly earnings may rise by 0.2% in July after no growth in June, and the year-over-year set to rise again back toward 2.3%, or up towards 2.3%, up from 2%. Looking into the latest employment components, basically which related to the US jobs report, the outcome were very mixed, which keeps the today jobs report is a very close call. But beginning with the arguments for the better jobs report today, first of all, we had the ISM non-manufacturing employment index continued to rise to a record level. In addition to that, also even the ISM manufacturing employment components also continued to rise to a record level. The four-week moving average of the jobless claims also continued to decline to more over record levels, or near record levels, at 268,000, and continuing claims continue to decline also further. These are the only four positive arguments which basically suggest a better reading. However, the negative, or the arguments for a negative reading or weaker jobs report today, beginning with the Challenger jobs cut, which was released yesterday with an increase of more than 125.4 thousand, which is the biggest monthly increase since almost 2011. The ADP non-farm employment change also came in with a disappointment this week, again declining toward 185,000, down from 229, despite the fact that estimates were to rise at least by 236,000. We've seen also a sharp decline in both University of Michigan and the CB Consumer Confidence Index last month. In addition to that, we had the Philadelphia Fed Employment Index, which also declined to a negative of 0.4%, or comparing to positive 3.8. The Empire State Manufacturing Employment also, and finally, the Empire State Manufacturing Employment declined back to 3.19, down from 8.65. Traders need to be very cautious, as if the numbers came in with mixed outcomes. Again, the wages will be the key today. A better wages would strengthen the chances and the idea for a rate hike by the Federal Reserve in September, which would clear the way for the the US dollar bulls to appear again, while a weaker reading would crush the US dollar across the board. We will publish our special report a few hours before the jobs report announcement, and we will discuss our outlook in details, in addition to our potential trade for today. Finally, as I said before, we'll have a look at the British pound. Yesterday, we've seen a decline of more than 100 pips yesterday because of the dovish statement by the Bank of England. Unfortunately, only one member voted in favor to raise rates by 25 basis points, while we were expecting, or the market at least, or the general consensus in the market was to see at least two members to vote in favor to that. However, we reached 54.68 lows before recovering above 1.55 and closed the day well above that level. However, the first or the pair basically closed the day well above, first of all, the minor trend line support, which basically stands at 55.70s, and closed the day well above that support, which clears the way for further decline. However, yesterday's support also represents a very solid support, because this is, first of all, we have a trend line here, which is from 4th of July, or so represent 24th of July lows. And in addition to that, also the short-term trend line support, which basically started since also almost May until July. This is so far, it stands at the same level. In addition to that, we have the Fibonacci fans, which is from April's low to at least almost May's high, or June's high, sorry. And all of these levels basically stands at the same area, which is between 54.50s and 54.60s, which needs to be watched very very carefully today. A breakthrough that support would change the positive outlook on the short term at least, and we may see more declines toward 53.86 followed by 53.57 ahead of the US jobs report today. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube to get the latest economic releases, reports and analysis. Thank you for watching. I'll see you once again tomorrow. Have a good weekend.